सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Let's do one thing. Let's do a ranking of Indian public figures, politicians about whom memes have been made over the past few days. Rank 1, 2, 3, 4. Chances are most of us will put Finance Minister Nirmala Sitharaman at the top. Why? Because she made that statement where she said it's not as if she doesn't think that the rupee is weakening, but that the dollar is strengthening, right? Then all kinds of jokes were made by all kinds of people. You will see some on my screen as I am talking, right? They sound very funny. But you know what? What if what she was saying was correct? Now, I know in today's public discourse, there is a great value and premium, and rightly so, on speaking truth to power. But it's, if not equally challenging, it's still an act of courage of some sort to speak truth to conventional wisdom. That's the reason I raised the question, what if she was right? And then there is enough data to show that she is right. It is the dollar that is strengthening, and all of the world's currencies are weakening against it in comparison. So it's not as if the British pound is weakening or euro is weakening or the renminbi yuan in China is weakening or Japanese yen is weakening or say the Turkish lira, okay, that's a bad example, I'll keep that out because that's sui generis. So it's not as if the Egyptian pound is weakening, but all of these are weakening relative to the dollar because the dollar is rising, dollar is getting stronger. Now then you have to see relatively dollar is getting stronger to which currency, and which currency is then weakening more with the strengthening of the dollar. That is how the currency arrangement works. So let us raise the first question. What do we mean when we say the dollar is becoming too strong? Now I will share 4 or 5 articles with you with today's description. 2 from New York Times, I think 1 from Financial Times, one is a Brookings paper, a Brookings research paper from one of their research conferences, and from the Wall Street Journal, etc., etc. So read all those articles, and many of these articles are quoting top economists of the world. So first of all, the dollar in this calendar year already has strengthened by 20%. 20%. Again, there is an index that's been used globally now. This is called the ICE US dollar index. What this does is, this gives you the value of the dollar relative to the currencies of the major countries the US trades with. So US's major trade partners. That in 2022, the value of the dollar has risen by 14%. This is the highest increase of the value of the dollar compared to currencies of its major trading partners since 1985. That is when this index was founded, or this index began. So again, this is a very heavily, rapidly strengthening dollar. Again, see the first graphic. If you see the first graphic on my screen, which will come up now, that tells you how the dollar has strengthened vis-a-vis every currency, or maybe how every major currency in the world has weakened vis-a-vis the dollar. However you may want to put it, that is the story. So why do we still say it's not so much a case of the Indian rupee weakening, but dollar strengthening? Because if it was a case of the Indian rupee weakening alone, then the other currencies also would not have weakened like this. In fact, in almost all cases, more than the Indian rupee over the same period. There was a situation before the strengthening of the dollar started. For example, the Turkish lira, the Pakistani rupee, the Sri Lankan rupee, those were collapsing. Those were weakening, not because the dollar was strengthening, because then the dollar wasn't strengthening. Dollar strengthening has started only recently, and we'll explain to you why. That's only started recently. But once see this chart, I have it in my hand, but you see it on my screen. This tells you currencies which have done really poorly compared to the dollar. Okay, usual suspect, Pakistani rupee, 30%, 27.9%. So let's round it off to 30%. That's all over the past year. This data is all over the past year since the dollar began to strengthen. And when we raise our next question and try to explain why the dollar is strengthening, you will know that one main reason is that is when Biden administration decided to take on inflation in America and started increasing the rates. So Pakistani currency has weakened to the dollar, or dollar has strengthened to the Pakistani currency 28%. The second worst is South African rand, that is 26%. What is the third worst? The third worst, hold your breath, is the British pound. The British pound, the way the dollar is strengthening compared to it, it's headed on its way to parity. These are the other major important currencies. South Korean won, 21.38% in 12 months. That is again जिसकी रही भावना जैसी, देखी प्रभु मुहूर्त इन तैसी, you can say it's weakened or dollar has strengthened against it, but won has gone down 21.4%. And you look at all the others, Australian dollar 18.75, Canadian dollar 11.81, Chinese yuan 13.19, the euro 18.8%. Indian rupee, on the other hand, in this period has gone down by 10.29%. It's among the two least worst performing currencies in this period. Indian rupee 10.29% and then Indonesian rupiah 10.31%, about the same level. So these two currencies have weakened the least. There are two outliers there. If you see that chart, one is Mexican peso. So I don't have any knowledge to suggest why Mexican peso has more or less held its own. If anything, it has minutely strengthened against the dollar. And then there is the Russian ruble, which is the only currency which has strengthened as to the dollar. Now you might say that's because Putin's great. I know Putin has a large following in India, but essentially it's because he's selling a lot of oil and gas now, pumping out a lot, selling a lot of it. He is not trading very much, he is not importing very much, so his is not a real economy. He is right now decoupled from the global system. So what's happening to his currency doesn't count. Now if you see, if all these currencies 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 of the 12 major currencies of the world look like the dollar has gone way ahead of them, or they have weakened compared to the dollar. It cannot be that all these countries are managing their economies so badly that their currencies are weakening. It's happening because the dollar is strengthening. So let's settle the first question now, that it is indeed currencies worldwide seem to be weakening because the dollar is strengthening. The common factor is the dollar is strengthening, and dollar is the global reserve currency. 40% of all transactions in the world, 40% of all transactions in the world take place in the US dollar. That's the currency in which countries pay loans to each other. That's the currency in which international banks settle their accounts, etc., etc. So when that goes up or that goes down, everybody gets affected. So that settles our first question. Is Nirmala Sitharaman right or wrong? The answer is she is right. Dollar has strengthened and everybody relatively seems to be going weaker. So with that, we also answered the larger question we had raised. What do we mean when we say the dollar is becoming stronger or too strong? Second, why is the dollar becoming strong? Again, now you have to read a bunch of articles, and these articles are with you, and I will give you some reasoning. First of all, US, they printed a lot of money and distributed a lot of it free during the pandemic to support their households and keep the economy growing. So while it did support the households, people just had a lot of money, and at that point they didn't have much to spend money on. But as the economy opened up, they began spending, and as they began spending, there was also the demand pent up for almost 2 years of the pandemic, that there was a supply shortage as well, and prices of goods and services went up. As these went up, inflation went up. As inflation went up, politicians began to hurt, because nothing hurts politicians, particularly in a democracy, more than inflation. So inflation went out of control. Biden administration decided to control it. How do you control it? You control it by raising the rates. And so in quick succession, one raise after another, they began raising interest rates. Now, as they raise interest rates, then the interest rates you get in buying US bonds also goes up, in which case a lot of the international investors who've meanwhile gone to other markets like say India for example or any other markets, they start pulling that money out and they go to the dollar, and they go to the dollar bonds etc. for two reasons. One, because they think now I'm getting good yield on the dollar, so why shouldn't I be sitting in dollar and getting a good yield rather than just succumb to the greed of getting maybe a little bit higher interest rate say in India, but also expose myself to exchange rate risks, because all other currencies are not strong currencies, most other currencies are not convertible currencies, they can become weak but dollar will remain strong. And second, dollar in the past might have been giving me 0.5% or 0% return. Now it's giving me 1.5%, 2%, 3% depending on where you are investing it. So why shouldn't I be here? So there is a global retreat of capital into dollar, into America. So money comes into America, but the whole world suffers as a result of that. So as more dollars come into the system, American system, the value of the dollar increases because the rest of the world is looking to buy dollars and take them to America. So this is a combination of insecurity plus speculation. The third thing that people see is that while global economies are in trouble, a lot of economies have declined, a lot of economies have slowed down, a lot of them have gone into negative growth. Even the Chinese have a stalled year, at least 1 year of stall, maybe 2 years of stall. China is a very big economy. It's one of the two engines of global economy with America. I know that two engine analogy is a little bit tricky to use here. यहाँ दो इंजन की सरकार की बात करते हैं हम लोग. The BJP politicians talk about two engine governments. So this is a two engine economy, and we know that drivers of these two engines don't exactly see eye to eye, but both engines drive the global economy in the same direction. So the fact is even China slowed down. When economies across the world weaken, and people watch that US economy with whatever problems it has, including inflation, is actually not doing so badly, then that is the third reason that they take money towards the US economy, and that's how the dollar strengthens even more. Now, when dollar strengthens, our third question, how is it affecting global economies? Now, two things happen. When dollar strengthens, then all over the world, inflation goes up because most other countries import a lot of their goods. So in America, for example, the percentage of imports to the GDP is only 12%. So if the Americans, one of the reasons Americans want to keep their dollar, they are quite happy if they keep cutting rates and dollar becomes more expensive, dollar strengthens is because they know that with a stronger dollar, their imports become cheaper. How that happens, I will tell you in a moment. But at the same time, imports for other countries become much more expensive. Now look at India, for example. India, just as imports make 12% of America's GDP, imports make about 23% of India's GDP, 22.9%, that is 23% of India's GDP. So America benefits this much from a stronger dollar, but India suffers this much from a stronger dollar, and as a result, a weaker rupee. Again, poorer countries have debt. Most of that multilateral debt or debt from other nations is denominated in the dollar. When they have to repay that debt, it costs them a lot more in their currency to convert it into the dollar and pay back. And that's why lots of countries are in trouble. This year we have seen 4 countries default on their global debt payment. That is Russia, its BFF, best friend forever, Belarus, usual suspects, Ukraine, the victim, and also Sri Lanka. Sri Lanka was a self-inflicted tragedy we've talked about often enough. But there are lots of other countries, at least 10 more, who are on the verge of a default. That is Argentina, Lebanon, Ghana, Suriname, Zambia, Ethiopia, Burkina Faso, Republic of Congo, Mozambique, and El Salvador. And you know, Pakistan's not even mentioned there. They are sitting this far from a default. It's just that they are too nuclear to fall, or too nuclear to be allowed to fall. So someone or the other does keep bailing them out. But the fact is, too many of world economies which had ongoing crisis anyway have now been pushed closer to the default because of this stronger dollar. Now, what can be the consequences of a dollar that becomes so expensive or that strengthens so much? So, read this article from Ruchir Sharma in the Financial Times. He argues, in fact, that a stronger dollar, while the Americans might think that it makes their imports cheaper and so brings down the inflation, it doesn't help so much because imports in any case are only 12% of America's GDP. On the other hand, this can set off a global recession. So if the dollar has strengthened by 20% in 12 months, this is at the same level. This kind of steep rise in dollar strength is at the same level as it was during the Latin American debt crisis in 1990s. In fact, in all 7 of the global financial or economic meltdowns, say in the last 35 years, one common factor has been an unusual strengthening of the dollar. So this strengthening of the dollar, he says, is now destabilizing the global economic system. So many central bankers in the world, he says, are now selling the dollar to support their own currencies. This is happening in India as well, and I will show you a graphic as we go along, not just now towards the end of this episode. Even in Japan now, the central bank is selling the dollar to support its currency. Remember, Japan always had the other problem. They thought the yen was too strong, and because the yen was too strong, they should try and weaken it because it was not competitive for exports with the dollar. Now, even they are also having to support their currency because, again, not because their currency is weakening, and relatively the value of their currency has come down. Now, Ruchir's argument is, he lays down 3 or more arguments as to why he thinks not just Biden administration. He says Biden administration should now launch a coordinated plan to bring down the value of the dollar because it's hurting America, it's hurting America's allies, it's hurting the emerging markets, and it's hurting global economies. And if the world goes into a recession again, that is something that the World Bank recently warned us about, then America will also not benefit. So the actions he suggests is, number 1, that accept that the dollar is seriously overvalued, so there is need to bring down its value. Second, that speculators now are long on dollar. So too many speculators have taken long positions on dollar, believing the dollar will only keep going in one direction. And that's why if a coordinated move, not just by the American Fed, by America and many other central banks together to sell the dollar in the market takes place, it will shock the market and it will shock all speculators, and that's how the strength or the value of the dollar will come down. That's a very good thing. Otherwise, this irrational high with the dollar is going to affect global economies very badly. Then again, we also read another article in the New York Times by Patricia Cohen, many others, who raise the same question, that America is the leader of the global economy. So they have to make a choice between real recession versus dollar value driven inflation. So you might think that if my dollar value goes up, my inflation comes down. But if the result is a global recession, is that a good trade-off or a bad trade-off? So obviously the answer is that this is a bad trade-off. You should not do it. In Britain, for example, now inflation rate is 10.1%. How long can Britain handle it? And if Britain can't handle it, what will happen to countries like Nigeria, Somalia, which are being pushed close to starvation because the food grain that they import, the price of that's going up. In Egypt, the amount of money they pay out every year as subsidy towards bread, purchase of bread, that amount has run out already, amount that they had budgeted for the whole year, because wheat price has gone up in dollar terms. Egypt, Argentina, Kenya, Pakistan, Sri Lanka, they are all close to default. I told you that I'll give you an example of how does it work when the value of the dollar goes up, how does it work for countries with strong currencies and weak currencies. So we take from this NYT article the examples of Egypt, Egyptian pound, South Korean won, and Nigerian naira. So 3 countries in 3 kinds of economic brackets. South Korea the richest, Egypt at number 2, Nigeria at number 3. So if you bought $100 worth of oil, crude oil, or maybe if you had a debt in $100 without any prices or interest rates going up, all that remaining the same. 1 year back for Egypt, $100 worth of oil would have cost Egyptian pounds 1575. Today it would be 1950. It's all happened because the dollar is strengthened, right? For South Koreans, 1 year back, the same barrel of oil or $100 of debt would have come for 1,17,655 South Korean wons. Today, it would be 1,43,158 South Korean wons. Again, Nigeria, it was 41,000. Nigerian Naira, it was 41,244. Now it's 43,650. So all countries are suffering. Inflation has gone up everywhere because dollar is becoming stronger. Again, see how this works with the richer countries. In Britain, the same article tells us a tin of British branded tea, obviously British didn't grow it, it must have grown in India, Sri Lanka, Kenya, one of those places. A British tin of tea that costs 12 pounds, it came from $16, $16.44, $16.44 1 year ago. How much does it come for now? It comes for $13 only. That means for the Americans, because the dollar has strengthened, it's that much more beneficial for them. But look at their allies and a strong economy like Britain. As a consequence, Britain's currency is weakened and inflation rates in Britain are now at double-digit levels, and even the rich Brits are crying. Again, a box of Belgian chocolates. If it cost you 50 euros, 1 year back, the Americans got it for $58.5. Today they get it for $48.5. So Europe also has suffered accordingly as the Americans have benefited from this. So there is a quote I read from Harvard professor Jason Furman who says, look, I can't remember the last time US was exporting inflation through a rising dollar. So this is a damage that US's policies which are leading to strengthening of the dollar are causing the rest of the world. There is also a paper I had mentioned to you from Brookings University. It's from one of their conferences. That's a paper by two noted economists, Maurice Obstfeld, who is from University of California, Berkeley, and Haonan Zhao, who is from Princeton University. The paper is titled The Global Dollar Cycle, and their central theme is that dollar appreciation shocks predict downturns in emerging markets and developing economies. And that's just begun to happen right now. And then they point out to you how in 1 week, so many countries have had to raise their rates. That is Argentina, Philippines, Brazil, Indonesia, South Africa, UAE, Sweden, Switzerland, Saudi Arabia, Britain, Norway, all of them in 1 week. Now, having convinced ourselves of the impact of a rising dollar on global economy, inflation everywhere, instability everywhere, let's also look at the India-specific situation. Now, we might say that all currencies have declined relative to a strengthening dollar, but Indian currencies have declined the least of all major currencies, leaving out Russia for now. Having said that, is it that everything is hunky-dory in India? It is not hunky-dory in India, and there are some problem areas in India. So first of all, look at India's current account deficit. So if India's current account deficit, and if you see this chart, the chart is self-explanatory, and that's a chart of 14 years. That's a chart going back 2008. So my colleague and the head of our economy section, P.C. Raghavan, he's helped me compile this chart, and he's gone right back to 2008. And you see this chart. In fact, you can see track the health of the Indian economy in terms of where the chart is going. That means the lower the chart is going, the tougher is your current account deficit. So top of the pops, when Pranab Mukherjee was in charge, the glory days of Pranab Mukherjee, 2012, our current account deficit has come to $31.9 billion for a quarter. Now it's come to 23.9. So it's been the highest now since October-December 2012, and it's declining further. So India's current account deficit situation right now is bad. You can say it's because of oil prices, but in any case, it is bad. Then you look at India's trade deficit. Again, all these things put pressure on your currency. India's trade deficit over the last year has ballooned. See, the graph is only going in one direction. Maybe one odd month it's declined a little bit. That might have been because some of the oil from Russia came cheaper. But the fact is that generally India's trade deficit has been increasing. So while we keep saying that exports are rising, and it's true that exports are rising, imports are rising much faster, and it isn't just oil imports, it is all imports, it's also merchandise imports. And finally, I know there's a lot of criticism and a lot is said about India's diminishing foreign exchange reserves, that India is now spending so much of its foreign exchange reserves to support its currency that soon India will run out of foreign exchange. So first of all, the first part of the argument is correct. India is spending a lot of foreign exchange. So again, we come back to the question of absolutes and percentages. Because when it comes to percentages, then the base matters. So see this chart over 1 year. This is a chart over a 1 year period, and this looks like almost a straight line. This worm doesn't twist and turn very much. This is almost a bit like this, right? So our foreign currency reserves were $600 billion 1 year ago. Today they are $532 billion. So at 532, less than 600 obviously, but still quite robust. The peak was 642 in about August 2021, but one reason that peak came about also was 2020 India imported hardly anything because most of the year we spent in the lockdown. So we got a better trade balance, more foreign exchange came in. Also because India was seen as an attractive market, a lot of foreign portfolio investment and a lot of FDI came into India in that year. Now, some of that reserve, say $90 billion, but $90 billion is just about 12% of a base of $640 billion. That has been used mostly to support the Indian rupee. So while it is true, the first part of the apprehension is true, India is spending a lot of foreign exchange to shore up its currency. The second part, that India is going into some kind of an alarming zone or a worrying zone, is not correct. Because after all, why do you have foreign exchange reserves if not to pull them out in times of crisis like this to stabilize your markets? So once again, there are challenges. There is a crisis growing across the world, but the world is not coming to an end. And definitely in this situation, as the IMF chief said, India is actually an oasis of some calm. So once again, accept the good news when it comes your way. Since we are heading for a festive weekend, I can also take your attention away from a Meena Kumari mindset to a kind of Devanand mindset and remind you of something that he sang in his film Prem Pujari, Yaro Nilam Karo Susti, Humse Udhar Le Lo Masti, Are Hasi Ka Naam Tandrusti. So don't mourn. There is nothing to mourn. There is a crisis in global economy which is owed to strengthening of the US dollar. We are collateral damage in that crisis.